So, ladies and gentlemen, yeah, the markets doesn't look that great, and many people are very, very scared, right? Which stocks should I buy? Which stocks should I sell? And exactly this we will discuss today. Make sure, guys, to let me know in the comments and in the live stream where we are watching from, okay? There is a couple of members already that saying, you know, TO33X, wow, space, great sale, and AP is saying, I'm painting walls, hello all. Then we have people from Netherlands as well, Arkansas, and many, many more to come, hopefully, because this is a very, very important topic here, okay? It's about how psychology of humans work, how the stock market works, specifically in the timings like that where we have a downturn, right? Do you remember the last downturn? You know, it was somewhere around June, where the stock market went also up 2.5 percentage per day and more. And you know, this was actually something that actually very much worried a lot of people. But in the end of the day, if you're thinking back, you were just thinking, you know, I wish I had bought in those days, in those red days in June or March, right? And that's why I want to first look into the market. No, first of all, I would like to make sure to start with a quote by one of the most important investors of our lifetime, Warren Buffett. And here we go. He says, "Be fearful when others are greedy, and be greedy when others are fearful." What does it mean, guys? Okay, this is exactly explaining the contraindicator of fear. If the market is, you know, very fearful and the market's going down, you should buy in. And when the market going up and everybody want to be in this market, or everybody want to, you know, jump on that, then usually it can go really, really down. We saw this also in separate assets, right? Tesla went almost a couple of times very, very high and then very, very low. Bitcoin, Amazon, just let me know a big increase of a stock or a commodity, and you will see that this quote by Warren Buffett works every single time, guys, okay? And that's why I want to also first go into one of the stocks, for example, here. Or let's go into the overall market first. So S&P 500 3.5%, Dow Jones 3.4%, Nasdaq 3.7%, Russell 2000 3%, crude oil 5.76%. So everything is down, okay? Dow sheds 942 points or 3.4%. Now, nobody can time the market, so I think that it's definitely really a bad day or bad days, and obviously, you know, that's totally normal. I just see a comment here from Antanas Yatkela, who says, "Do you honestly believe that markets only go up?" Obviously not. Obviously not, guys. But long term, it will, okay? There was never a crash, and we had the world wars, we had the World War II, we had the big recession, and every time after just a couple of years, we are much higher than that. So, are you putting down your ego and buying on those fantastic prices and discounted prices, or you're thinking, no, I will not invest anything because I think the market will crash tomorrow. We will dive into that in just a little bit, but let me show you also a nice indicator here, which is the RSI. This is, for example, the Tesla stock, and the RSI is somehow of an indicator of oversold situations. And as you can see, we went here even today up to 20, which every time we went at this levels 20, 25, we had an uptick. Okay, here we went further down, we had an uptick. Same here, we had an uptick. So it's coming to an area, and here even we went to 9 RSI, and then we saw what happened. But it's always the same, that it's going first up and then going down, going up, going down, but it's going always a little bit more up than going down, and that's why the overall stock market, S&P 500, is going up over the years. Let me just show you what I mean. Let's have a look into the S&P 500, and let's see what is the maximum that we can pull. Okay, so the maximum would be let me have a look. Can I? Okay, here we go. This is the S&P 500 until 1928. And as you can see, slowly but surely we went up. Sure, there is the crisis 2009, 2000, right? Of course. And of course, there's the crisis 2006 and 2007. But look what happened after that. And this is just a pattern that will repeat itself for a very, very long. So I think this is just, showing you that it take maximum 2-3 years after a huge crisis, and we don't know yet if this will be a huge crisis or not. Definitely, of course, I will agree that the economy is hit, obviously. Of course, the lockdowns are bad for the economy and businesses. Of course, people will lose their jobs. But we have a couple of things that are on the horizon that are looking quite good. Car manufacturers, which is a great indicator for the economy, saying that the future market is picking up again, right? So we don't know. People are buying cars apparently. So Daimler, for example, which gives even premium cars, which is I think that is absolutely fantastic indicator to show you that even Daimler, that's selling premium cars, is moving up their guidance. Okay. And yes, we will have the second wave, obviously, but then afterwards, if the vaccine and all the other things are coming, I think, a bright future and a nice rally will come. Also, the elections will be done by then. So very, very interesting time to come, guys. Let me have a look now into the things that we want to talk about. But first, make sure to thumb up for this live stream if you like it so far. I'm highly appreciating this. And obviously subscribe if you are new. Make sure to do that very, very immediately. Now, let's have a look. So there is a cycle of emotions, okay? First of all, if a stock market goes up, we have optimism, we have excitement, we have thrill, we have euphoria. We think like nothing can go wrong. Then comes the anxiety, the denial, the fear, the desperation, then the panic, capitalization, despondency, depression, then comes hope, then comes relief, and then comes optimism again. And these cycles are coming every time again. Okay, so this is something that repeats itself over years, over decades. Every time it's repeat itself. So I think that it's unbelievable where we are thinking that it's absolutely normal, right? I mean, normal that we are going into something that is quite fearful and brings a little bit of depression. But hey, it would be not the stock market when it would be too easy, right? Make sure also, guys, to follow my second channel, Wolf of Dubai 2. I'm posting there every single day, and it's a lot of content that you might be interested in, right? So I'm super excited to see you there as well. Make sure to subscribe. Then there is something that I would love to show you as well. I think, let me just have a look. There was an article today at MarketWatch where they are saying that the fear on the market and that people talk a lot about the stock market crash actually gives us a great counter indicator, which means the following. So here you can see when the probability of a crash is thought to be lower. So 2006, the probability was almost 50% of the people said, we are not going into a crash, and what happened? We went to a crash. Then in 2009, when people said, there will be a very big crash, there will be another financial crisis, the financial crisis will be there for, 3 years or 3 decades, and what happens then? The market goes up. So as you can see, whatever the people are thinking, it's actually more of the opposite what will happen. If you have more and more people that's saying that there's a stock market crash, then you should rather think about to invest into the stock market. And on the other side, if the market, they're saying, will be no crash, the housing market will no crash, then you should maybe consider to, buy some shorts on the market. So, what else? Here, and another indicator, also here, very interesting, put together by this article of MarketWatch. So make sure to check out those guys. A CCI indicator that shows us that the lower reading, so the crash confidence index is lower than 10%. So if people are thinking, wow, we think there's a high risk of fear of a crash, then the stock market actually returned approximately 24%, and an average S&P 500 total return over subsequent 24 months was even 45%. Now on the other side, if the people thought it was a low fear of crash, the average S&P 500 total return was 9.5%, and the average over 24 months was 10.6%. So as you can see, every time the people think it's crashing, it's actually going more higher, and the other way around. So this is the statistic that is based on the crash confidence index. Moreover, there is something that it's called fear and greed index, and I think it's by CNN and other news outlet put this together. And if you are seeing the latest put and call option indication, there was a lot of greed the last couple of weeks. Okay, that's why if this high amount and volume in trading and options is there, then you might see the bigger crash afterwards as well. Okay, so this is actually what happened. So this is the fear and greed indicator, and at the put and call option, it was actually greed that was there, and it was just changed from yesterday, where it was extreme greed. Okay, so as you can see, there was a lot and lots of call options that was put on stocks, and then we crashed, and then we see now that everywhere else, like stock price trends, stock price breadth, market momentum, everything now it's on fear, which is a good indicator, right? So it can obviously go a couple of days like that for the down, but definitely we will not see another crash like in March. And this is something to understand. It can be already that we see tomorrow another a raise up for the stock market. I would hope so. And obviously those long-term investing guys under you will understand that this temporary downturns will just be another chance to pull on those favorite stocks of you. Okay, so make sure to check this out. Then I want to close this stream also with a nice quote by Peter Lynch, which was one of the biggest and best hedge fund guys out there. And he said actually far more money has been lost by investors preparing for corrections and obviously also on crashes, or trying to anticipate corrections than has been lost in corrections themselves. What does it mean? People, was waiting on the sidelines because they said, no, there's a crash coming. Actually, the stock market just went higher and higher. This actually happened in March the last time. This happened in March 2009 as well, where the people didn't believe that now it's the time to turn. So I think over 100 years nothing changed and will not change. So I think that you are absolutely, prepared if you watch this live stream. But obviously, make your own decisions. But panic and emotions are never good for your trading. And let me have a look if you have any questions. So let me have a look. So we have people from the Netherlands. We have people, our TO33X, our member, AP, our member. We have Alabama there. We have Sydney here. We have Belgium there. Then we have people from Bulgaria. Yeah, Bannerman says Baneman says, I can't buy anymore. I spend it all on Virgin and Palantir. So what else? Have you bought already Peloton? No, I haven't bought yet Peloton. I planning to buy into Peloton. Let us have a look where Peloton currently stands. Let me have a look where Peloton is the stock we are looking at. Yeah, they're still, quite high at 125 or 122. So, and today was even positive, guys. So what a stock, guys. What a stock. I was so close to buy into it when it was at 78, 73. Unfortunately, I missed it. But I never, look back on an opportunity and think, oh, I should have bought and I'm so stupid, because those opportunities come over and over and over, and I just learn from those, okay? And you will learn with me if you stay subscribed, obviously. If you are not subscribed, make sure to subscribe. What else? We have people from Toronto, Canada here, Slovenia, DC, Ronnie Frey, our member from Las Vegas. What could be the bottom on Virgin Galactic? I think a huge resistance for Virgin Galactic is actually like 14, 15, 16, like in this area. What else do we have? Mexico, Florida, Wales, DC, Florida. Imran is asking about gold. Well, I'm not such a big fan of gold. I like to rather invest into businesses that can exponentially grow with their products, with their management, and so on and so forth. So, I think that that's better than gold. Then we have Estonia, Puerto Rico, Japan as well. And what else do we have? Germany, I have seen somewhere. Great. Thank you very much. Salt Lake City is also in the house. What do you think about DraftKings? I didn't look into DraftKings, but I recommended 3 top stocks on my both channels for this month. So check them out. And thank you very much for tuning in. Stay healthy, safe, and I see you obviously in just a couple of hours tomorrow morning with another episode of Breaking News.